FX once again. We're here analyzing the pair. As usual, zone-to-zone strategy is continuing to prove how profitable this strategy in calm it is, and through it you can be able to marginalize your profit, relying on higher time frame, order flow, relaxing, no need to frequent check for the charts in markets because the highest percent, about 90% of the orders with zone-to-zone strategy are pending no limit orders because you know where the liquidity is, you understand the turning points, and it makes it very easy to grab the opportunities while you maintain doing other activities. So now again, we have this Euro AUD entry which was triggered on last Friday, and TP hit since yesterday. So I had no time yesterday to have to take this video. So now I'll just take you through the top-down analysis to see how I've been able to capitalize from this trading opportunity, harvesting about 150 pips for a course of 5 trading days from Friday, Monday, Tuesday until Wednesday when TP was hit. So it's good, it's very good. Let's stress the good sniper entry as we see here from 4 hours liquidity flip. But the whole trade analysis for this pair began from what we call a higher time frame, and with respect it was at least 3 months time frame. So we'll do an analysis from where we started to look at this opportunity to when it hit our take profit. So the analysis of this pair literally began from 3 months time, right? So when we look at the market, the higher time frame structure is the same. The difference is that just take a time. But this is a bullish trend, right? So when we break the structure and creating a new high, we expect a market to come to the test to any sort of liquidities. It could be this validation point or other liquidities which could perhaps be found within the gap, the zone of business from the validation to invalidation point, and perhaps price might continue to go the bullish side. But if we get a candle that will break under this invalidation point, follows of the structure, here now is what we say the market has violated the bullish momentum, and now we are going within the shift of the structure into another opposing direction. So what has literally happened here is that we have had this very beautiful bullish trend since 2022. We made the higher high, the higher low, the higher high. So any sales which took place from July last year to date is just a matter of retracement until when? Until we get a candle, a monthly candle, 3 months candle, which will close under the 3 months loss of structure. Under circumstances, we perhaps say that now the market has already shifted and we are going bearish. But at this moment, despite the fact that for consecutive 1, 2, 3, 4, for consecutive 3 quarters, this price is selling, it is selling as a matter of higher time frame retracement or correction. Let's get there. So this market is bullish. And where we are heading to this low structure or invalidation point of the 3 months time frame, right? Then let's go to the monthly time frame to see what happens. Coming to the monthly time frame, we know for the fact that any sales is just a matter of retracement, right? And we could perhaps start the candle. Look at this March, the candle of month March, it is a pin bar, but the followed candle of April, it was a Mariposa. If this pin bar would have indicated a retracement, we would expect what? This price to continue going to the upside. Why we have had this pin bar is because this price touched this liquidity engineering here. You see, as I normally say, any liquidity that we have and when they are happening in the higher time frame, they should give you a retracement if the trend is still continuing with the higher time frame momentum. But otherwise, it should be used as a point for your exit. So we would have expected that this price will continue to sell only if this pin bar wouldn't have been followed by a Mariposa. So the presence of this Mariposa indicating that sellers are still have an agenda to take this market to the lows of 3 months time frame, which are perhaps seeing very better once we use the line charts, right? And this pin bar, which gave a retracement, this retracement came to end at the monthly time frame price flow and price ceiling zone. As we see here, we have at the price ceiling with weak rejections. Again, we have at the price ceiling again, the high momentum candlestick broke to the downside. That's a strong Mariposa retracement, and then these prices perhaps continue to go to the downside. So this retracement, which has happened for these two consecutive months, like this is July, June and May, it was a mere retracement following what this Mariposa candlestick. So let's go the next lower time frame to see whether this retracement goes over and so forth, so that we can have further capitalization. Then, if we study very closely and clearly, perhaps we see when this price came to retest at the monthly price ceiling zone, we have a lot of reversal indicators. Like we have an inverted pin bar here, you have an evening star or shooting star. So any retracement that took place from here to this point, it was only a matter of retracement. And we could perhaps see we have another pin bar here. It's a sign for reversal. Then we could establish a weekly zone to see whether this reversal have had happened at a potential area of interest through this weekly time. Perhaps you see we have had a price support here. We face the resistance with an inverted hammer. Then when we come to the left, we have a price floor here, we have a price ceiling. So it's a good zone. Now what comes after that is that if this retracement over, let's go to the next lower time frame, which is the daily time frame, to have more meaning. Look at the movement of this price when it was going to the downside. We have at a higher high, higher low, higher high, higher low, a little bit of an SIS, which gave us a confluence of the shift of structure before this market continued going to the downside. So we have a very beautiful and very clear shift of structure over here. This is a bearish direction change. Yes, bearish. So now we have a bold confluence that, okay, fine. From the weekly time frame, we have had a pin bar, which have had a retracement around here, and then from the daily time frame, we shift of the structure. Now we look, despite the fact that we're intending to take this market to the laws of structure, by then, along the road, we must respect some other structures which could have happened. Like you see here, there is a bit of zone. There's a zone with a lot of rejection wicks and so forth. So we use that area as an exit point. Okay. Now we look at the current market, because we have already shifted. Whatever happened in the past remained in history. What's happening now is far more important. Like we have this structure: low, high, lower low, lower high, lower low, lower high, lower low. Right? Now look at what happened here. You have had a zone. Perhaps it was a very strong zone for the daily time frame, but this zone was broken down. Right? It was broken by what candle? Look at the structure, the behavior of the candle. This is a Mariposa, and liquidation took place on Tuesday with the behavior of EDE. So the EDE was already tested under that circumstances, right? The EDE has already been tested. So under that circumstance, you don't expect this price to go further to the upside. Then, the matter of fact, now we have another zone here. We have what? Another zone. Okay. Now another zone which is strongly broken down by a very high momentum. Then we expect what? To have a retracement to this zone before we have a further continuation. So we have so many factors. Like we could have used even Fibonacci by waiting to see the retracement. Here the retracement is not taking place. So perhaps there's this price is shifting there. And when the price started to give a pullback, we will have a good point to have measure the Fibonacci retracement. By then, we have already spotted the potential area of interest to take our sales trade, and we have already established our take profits, right? Yeah. Okay. So we have all these things here intact, very much better. Then you go to the 4 hours and you see we have a liquidity play. That's why being able to get a good sniper entry that took all the way to the profit. So on Friday, this price was tested, and then you see we have got a very good potential take profit. The entry and the exits were all very much precise. See, the entry was after 4 hours liquidity. 4 hours, go to the left side, and you be able to find out this liquidity out the all the low, thrust down, thrust up candle. It was supposed to be liquidity engineering, but then the failure of the liquidity engineering, we get what just a matter of being patient and waiting to see the retracement, which by then Fibonacci, it was about 62 Fibonacci level. It was okay. It was on the 62 Fibonacci level once we measure from the daily time frame when this price is starting to give us a retracement, right? So we have had a retracement here. There's a retracement here from this swing point here. This swing point, swing point here. So we get a 68%, 61 or 62% of Fibonacci retracement. So it is what it is. This is Betos FX. Until next time. All right.